Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, January 23rd, 2009. Well, a monster reversal again on Wall Street, folks, and I really want to focus in on not only the charts today, but some of the calls that we've been making in this market, because my partner had crunched the numbers last weekend and had alerted me and said Thursday and Friday of this week would be some of the wildest trading days that you have seen in a long, long time, and they were absolutely dead on. He said, be very careful because you're going to see some big drops, and then you'll see some big pops, and that's exactly what this market has done. And look at the moves here. From the high here, going on Wednesday, to the Thursday low, to the Thursday high in the afternoon, back down, the gap down today, the rally, and now you can see the markets right now have come all the way back from a ugly sell-off this morning after some earnings reports and some odds and ends over in England where they confirmed they're in a recession now. You got that. You have GE earnings coming out this morning that were not pretty either way, but ultimately it caused an ugly gap down, and you could have bought that gap down and just gone long and ridden this thing up beautifully, as the market has for the most part gone positive. The Dow still is down slightly, down about 40 points or so, but the NASDAQ is up 15 to 16 points. The S&P is up about 6.5 points, and this market just continues to rip higher here over the course of the day. Now, the key here is this, folks. There's some key levels you want to watch, and I'm going to go over them, and we do this. And by the way, I just want to announce the chat room now has video. Those in the chat room now can watch my live charts and my partner's live charts as we trade. All right, you'll see our support lines. People ask us questions. We bring up those charts. We show the support and resistance and talk about the possible moves. It's really a fantastic new addition, and couldn't be happier with it as we are now. Okay, into the charts, guys. Again, the markets across the board are positive. NASDAQ, S&P positive. The Dow is still slightly negative right now, down about 35 points. Now, what you saw here, folks, is the gap down. Now, the key levels all come from yesterday again on this 10-minute. If you just see yesterday's chart, you will know what to do with this market. Number one, look at this low yesterday. Draw your line. From the low, right over, what happens? You gap right below, but remember how we talked about last week and the week before when you had a gap down above or below support? As long as you didn't recapture that, it would go lower, but if you recaptured the support line, it was a buy signal. So here's your support line. You gap down below it, but on the second candle you recapture. The third candle, again, that's a buy signal, folks. If we had gapped down here and traded sideways or a little lower in the first candle, that's a signal that you didn't recapture the support line here, and it now becomes resistance, and now you're going to trade down. But that's not what happened. And all of a sudden, you recaptured that line to the upside, and where did you rally to, folks? Where would be the first point on this chart that you would rally to? Obviously, the move up would take you to the point right here. Draw your trend line in from the lows that were put on that drop yesterday afternoon, and where do you get? Right there. How perfect is that? Take the low there, and sure enough, that's your first entry or exit point. If you're buying the market here on that pop, you sell it right there for a pullback. Now, where do you pull back to? Yes, just into the lows or right above that trend line of support, and the market just gets taken right back down there. After that, the market's a buy again, right off that double bottom support. And this time you bust through the key moving averages, and this time climb all the way to this resistance point, which is the 200 moving average. Note the green line being the 200 moving average intraday on the 10-minute. Now, the key is this also. We know enough about moving averages to know if they're going to be a significant resistance, you want to see multiple resistance levels at the same point. That's how you know you're going to pull back. Well, what do we have here, guys? Not only do we have the 200 moving average, but look at the gap fill on the market right here. This is where the market closed yesterday. Draw your line across, and what do you get? Absolutely. So there's your secondary resistance line, and two, especially on the first hit of a moving average during the day, two resistance lines like this. You have a trend line and a moving average is going to be a shorting opportunity. Where does it take us? To the 20 moving average and the 50. And this is point you kind of gyrate back and forth between the lower trend line and the upper. Now, why do I say that? Well, extend this line. And I never extend it until I talk about it, and that's why I do that on purpose, because look at how key this line now becomes. Extend it right through. All right? And look at that. Bounce right back. Then we'll extend the one on the upper side right through as well. Look at this. All right? So how key is this point and this point, which were two of the key plays on the first couple hours of the market, become. Now, all of a sudden, you come down here, you bounce. Also notice this, it's the resistance point or support point right from this point as well as from this point. So now it's a double support line, including a triple because of the 20 moving average. Then you bounce up, back to the 200 resistance, bounce back down, back up, pull back a little bit, and now you're starting to hit this enough. When you hit a trend line or a key resistance line, I don't know, 3 or 4 times, 5 times, 6 times, whatever it may be, every time it becomes weaker. Now, how's a good analogy? What's a good analogy for this, folks? Because I really want you to understand this. If I have a wooden door in my way, and I can't get through to the other side without getting through that door, and I don't have a key, what am I going to do? I'm going to run into that wooden door. First time I hit it, I probably am not getting through unless it's a really flimsy door. But if you have a multiple resistance point like this is, it's a pretty good door. I got to run as hard as I can a second time, a third time, a fourth time. Every time I hit that, it becomes weaker and weaker on the hinges. The wood becomes weaker, ultimately breaking down on later in the hit. So again, that's my analogy. That's a good analogy to use. The more times you hit a moving average, it's like a wooden door. Eventually you bust through. That's exactly what we did. Now, where does this first candle take us? Absolutely. Look at this, guys. Right there. So that's your first target on a breakout above this line on an intraday basis. At this point, you start to accumulate and move higher, even breaking through after hitting it a couple times. Notice the multiple hits again on this resistance point. Then on this candle, you move up. But you have to realize that at this point, the market's gone from down here to up here. Not only that, you have a secondary resistance point right here as well. Draw your trend line in across. And again, all these lines should be drawn on your charts earlier in the day. So, just extend them. Extend them. You'll see that most of them become key as long as you're doing it right. Now, not everyone will do it right. That's unfortunately the way it is. But that's why you guys are watching these videos to learn. That's why you should all be joining the Research Center. And by the way, folks, the Pro Trader watch list is now up on the Research Center. We'll be posting that this weekend. That is a compilation of every pro chief market strategist watch list at the beginning of the day. We're going to say bullish or bearish. It's not an entry point by any stretch, but it's what you want to have in front of your chart, in front of your trading screen, whether you're an investor, a swing trader, or a day trader. All of the plays will be included, whether we're looking for them short-term, long-term, whatever it may be. You want to know what we're watching? This is going to be the list. So join up the Research Center. Now, in addition, guys, notice the resistance point right up here. At this point, as I said, you're just getting a little too tired. And you have to also realize this. Check this out. Another analogy. I love analogies. I run into a door 3-4 times, break it down. I run into another door, break it down after a few hits. I run into a fourth or fifth door. You know what? I'm beginning to hurt a little bit. It's starting to hurt me. And I'm going to get tired again eventually, guys. And that's exactly what the analogy has to be used. So here's your first door, second door, third door, fourth door. I'm hurting by this point. And at this point, I just can't do it anymore, guys. And where are you going? This is live, by the way, guys. And I had drawn this line in even before we got here. Where are you going? You're piercing this support line, and this is becoming support. You also have a key 50 moving average right here, which you could test, but right in here is very, very good support on this market, and especially if you hit here, I would start to look for a little bit of a bounce back in this market. Should you break through that, look for this lower trend line, and these trend lines will all be key. Notice if I extend this one again, right across. See these consolidation candles right here before the breakdown? So you broke above it, then you consolidated right here on top of this support line, broke through. Now you're actually consolidating, you broke through here. Now you're hitting the 50 moving average. There should be very good support. We'll check back in a minute to see if we go lower or bounce, but I'm going to guess we bounce right off of this. We'll check back after we look at the 60-minute. Okay, guys, just one thing. This is the 60-minute. You see a pretty ugly reversal candle here on the intraday, but this technical signs, again, we're talking about this in the Research Center, guys. Join up because we have some key analysis stuff to relay. Obviously, the educational videos, the picks. The Hidden Gems report is going to come out this weekend, too, guys. I'll be releasing 2 hidden gems or 1 hidden gem, depending on what I find. Last month, the 2 that were released, 57% profit in 2 days and 45% profit in 2 days, I believe. Really unbelievable moves, and I hope to pick 2 good ones again. We'll find out. In any case, nonetheless, look at the market here. You have double bottom support. Look at where we knew. Came right down into that early on in this chart, and look at that. This is why you also looked at the 60. We want to look at all time frames because this 60, as you gapped lower today, tells you you're on triple bottom, double bottom support here. And sure enough, look at the move up. Now, where do you go? Here's the 50 moving average on the 60-minute. You pierce it, and what are you doing now? You're pulling back. Okay, guys? So, again, keep that in mind. Also, webinar, guys, February 7th. This is where we teach you, actually. It's a live with your one-on-one with the chief market strategist, or we do about 10 people per webinar, 5-10 people. We don't allow more than that. So join up on InTheMoneyStocks.com. Also, guys, we have a new blog. It's a free blog on there. We're posting. We have all our traders posting in that. You'll get intraday stuff. You'll get articles. You name it. It'll be in there. Check out InTheMoneyStocks.com for these new updates. Take care. Have a wonderful weekend.